Okay, Jim, we're at the Top Producer Summit in Kansas City, Missouri. There's a lot of producers here from across the U.S., a lot of marketing questions. You did a concurrent here this morning. What's the main thing people are asking you?
Well, the main question right now is, what's going to happen next? I mean, there's just a lot of uncertainty in the markets right now. We have a new administration, obviously, President Trump. A lot of the markets, people are asking what's going to happen next. We've had one heck of a rally in the corn market. I mean, from where the funds are carrying this massive short, Shaun, back in the fall, they reversed this to a pretty hefty long, not at record length. That's pretty unprecedented reversal. So just a lot of uncertainty as to what do we do going into 2025, 26 crop year. The big question now is how many acres we're going to plant. That's a common asked question.
So what's led to this reversal? Is there just a bunch of more demand in the market we didn't know about? Or is it a situation where we shot too far to the downside? What exactly happened here?
There's three different things I think that drove the market, the reversal by the funds. The first one was inflation. As you look, that market started to turn right about the time President Trump got elected. And the reason being, his policies that he's been pushing, tariffs, are inflationary. They just are. When you start tariffing products into the country, no one's going to bring that product in unless they can pass it on to their buyer. So it's inflationary. And then also you could argue what, maybe some of what he's doing with the immigration. You take people out of the workforce, and then you have to replace them. It's very hard to replace them. You got to pay the people to replace them more money. So an inflationary policy, it brought some fund money in and just said, you know what? We want to own commodities as a way to hedge inflation. And we started seeing that in the corn market. It was weird. You didn't see it in the wheat market, but you're starting to see it in the wheat market now. So some of it was inflationary. Some of it, the crop just was not as big as we thought it was, as the crop tailed off late in the year. And that also accelerated. And then lastly, because of the new Trump trade policies, export sales are way ahead of last year's pace. And that had people excited. Now, the exports are a little bit cautionary, I'd say, because we don't know is it front-loaded, or are they just actually, essentially, are they buying more than we originally thought? We really won't know that for another, I'd say, 4 or 5 months if these sales stay strong, or do they start tailing off? In essence, they just got everything they need, they just bought it early.
Yeah, we've seen that with some canola exports where exporters are trying to get ahead of potential tariffs, right? And
exactly.
So that at the end of the year, the number may be the same, but the distribution of it through the months could be different.
Exactly. That's the wild card. Or did they come in and buy more than we originally thought?
Yep.
And the government made a big revision in the December WASDE report, and they raised demand up. And that was always the question. Did they, were they too aggressive raising demand? Now, if you look at that sales for the first quarter of the marketing year, yes. But like I said, were they just trying to front run it in front of a potential trade war? Time will tell.
Yeah, and one of the things that I've been hearing here this week, and you and I were chatting earlier, concern about the softness in China. And at a time where the administration is really trying to boost those ag exports, maybe make China live up to those phase 1 commitments, yep. Is the demand in China to do so?
I don't believe there is. I mean, the reality is this. China did a very poor job fighting COVID. They were in lockdown for multiple years. And as they did it, it decimated their middle class. Their middle class, China, interesting enough, they're a communist country, but they do not have social safety nets like Canada does, like the U.S. does. So when these Chinese were really hunkering down, they were spending a lot of their money. A lot of their assets also are in housing. Their housing market has absolutely collapsed. So you could argue if we're thinking we're going to get them to buy something, I fear we don't. I mean, right now the USDA is estimating, I believe, roughly 28 million metric tons less imports of corn, beans, and wheat this year than a year ago. And that just shows you how weak their economy is.
There's been a lot of talk about the corn acre being higher this year versus last year. Has that subsided a little bit, or are we still thinking like in that 6 to 8 million more acres of corn?
We are looking for a lot more corn acres, my belief. I think it's going to be very, very big. 2 years ago, we planted 94.6 million acres of corn. Okay? So if you just look at the normal rotation, if everyone stayed in rotation, you bring about 94.5 million acres of corn in just this upcoming year. But when you look at the profitability, like in Illinois, if you're an Illinois farmer, you need, I believe, $11 beans to break even. And if you're corn, you need like $3 or $4.64. So you're making money with corn, you're not making money with beans. My clients in Nebraska saying the same thing. It doesn't matter where you're at, to be quite honest.
Yeah.
There is no money in beans. So we are seeing a shift of acres that people do it. You go to the south, rice, cotton, they're moving away from those products. And the default right now, because of the current price of corn, because the fund's buying corn on that inflation demand, that is what we're buying. So it's a situation now, 95, 96 million acres isn't out of the realm of probability. Now it depends on what the yield is. If we plant 95, 96 million acres, we have anywhere close to trendline yields. Our carryout, which is around 1.5, balloons back over to 2 billion, and the whole paradigm shifts right back to bearish within 6 months.
So what's going on with soybean demand? Renewable fuels not doing their job? Like, what's happening?
Renewable fuels just haven't built out like a lot of people thought. I mean, there's a lot of excitement a couple of years ago. We've built some new ones, but not near as much. Part of it is the policy of used cooking oil was flooding the market. Used cooking oil is a much better carbon score. So that kind of hurt the demand for renewable or for bean oil. And then lastly, meal. Meal is just taking it on the chin. Why is that? Bird flu. Bird flu is ravaging, not just in the United States, but around the world. And that's hurting the demand for meal, which hurts the crush margins, which hurts the demand for beans. So just lack of demand.
So Jim, to wrap up here, in the short term, what are some of the key couple things that you're paying attention to and watching that'll provide us with some direction on where we go from here?
I think there's two things you really want to watch. First one is the fund direction. The funds, if they want to keep buying this product, corn, beans, wheat, whatever it is, they're going to drive it up. So you want to keep an eye on the funds week to week when we get these outlooks. See, are they adding or reducing? The second thing is you just got to see what the new Trump policies are going to be. We are in a lot of trade questions. There was a trade, we slapped tariffs in the U.S. on both Canada and Mexico. They paused them for 30 days. We got to see what happens when we come out of that pause. We got to see these reciprocal tariffs that the U.S. is doing. Then we got to see how other people reply. That is going to have a huge impact on where trade goes, I think. And, a lot's going to happen. A lot of these tariffs you got to keep an eye on. Are they tariffs? I mean, the question, Shaun, is, are the tariffs a negotiation tactic or are they a finance? Because President Trump goes back and forth. Sometimes he talks about it as finance. So if he starts talking these tariffs as a way to finance his tax cuts, which is what he talks at times, it changes the game because it's no longer a negotiation tactic. Yeah. It is a monetary situation, which means once they're on, they're going to stay on.
Well, and what are you hearing as you talk to commercials out there or even farmers from the standpoint of who actually would pay the tariff? Because if you offer 25% less for Canadian spring wheat, you're not going to sell it, or you're not going to be able to buy it.
I mean, the reality is, I tell people the reality is this. It's the tariff is paid for by the people who want the product. The middleman, the guy that's bringing the product in, he's bringing wheat in from Canada, he's bringing a BMW in from Germany. If he has to pay a 20% tariff, 25% tariff to bring that product into the United States, he is not going to bring it in there unless he can pass it on to the consumer. Okay. That is just how it works. Why else would you do it? Why would you pay a tariff to lose money? So it will get passed on.
We've been talking to Jim McCormick from agmarket.net. Jim, you and your team you do great work. Thanks so much for taking some time for us here today.
I appreciate you having me on.